Starting in a couple of minutes, just got to get the stream up. And good morning, everybody. It's 8 a.m. Eastern New York time. We may have some volatility in our session, but first of all, I am going to go through the disclaimers. All Bookmap Limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, just a quick reminder, everybody, of the new format that we established last week. They are roughly in 15 minutes, but in practical terms, not exactly 15 minutes. And today, with a major piece of economic news being released at 8:30 Eastern, we're going to spend more time looking at that, I imagine. Okay, talking of which, let's have a very quick look at the calendar before we start looking at Bookmap. So let's just get the calendar up. Okay, at 8:30 a.m. Eastern, we have the core CPI. So we have CPI basically. Forex Factory here, I've got this calendar up just for a change because they have this lovely red and yellow coloring. They clearly indicated it is red. And other than that, on the calendar, we've got the crude inventories at 10:30, which may add a bit of volatility, and the budget balance at 2 p.m., by which time I hopefully will be fast asleep. Okay, switching back to the markets. Okay, before I spend any time looking at that educational content that or ideas that I try and generate for every session, let us just look at ES in Bookmap as we approach the CPI release, which is now in 28 minutes. So just a reminder, one of the things that I like doing before we have a big release is looking at where the zoomed out resting liquidity, I'm just going to move my microphone because it's a little bit too close, where the resting liquidity is, just because it can easily get there on a major release which doesn't go with market expectations. So you can see here up at 452, 475, we've got 407 contracts, and below, if we ignore this band at 4509, if we look below at 4503 and 4500, you've got some liquidity, but the big fat one is up at is essentially 4525. So we'll note that. In fact, since the easiest way for me to note that for this purpose is just to grab it and put it onto the trading view chart. So we'll just pop it on there. Come on. Okay, so it's marked there. So should this chart move rapidly at 8:30, we will see it. In other words, it's up there. Okay, so so that I have time, let's go into our little education ideas session. By the way, one other thing to note with Bookmap and also TradingView today, I'll just mention it. I always try and mention when anything is changed on the screens. I'm not showing Market Pulse today. There's been a technical glitch with the latest update, so the Bookmap team are working very hard to fix that, and hopefully it'll be back on our screens the next time we have a webinar on Friday. I think this affects everybody, not just me, but yeah, we cannot watch Market Pulse on the screen for this session. Okay, one other thing on TradingView, I've cleaned this up a little bit. You'll note that there's only 3 indicators on ES or NQ, and I'll just expand what those are. So I've popped in a very faint shadow form the visible volume profile. This is so that we can see on a high level basis, or high level in terms of a 3-minute chart being scrunched up, you can see that volume profile, so you can see how it relates to the supply and demand trades that we've been taking, and that essentially, you know, whether you're talking about Wyckoff, you're talking about supply and demand, or you're talking about volume profile, essentially you're doing the same thing, or to a large extent, in my personal opinion, you're doing the same thing. So I just thought I'd put the volume on, and as we zoom in and out, that volume profile, because it's a visible profile, i.e. it covers the bars that are visible on the chart window that you can see with your eyes, that will change. And it is very, very faint, and that is deliberately so that it does not get in the way of the developing value shown by the VWAP bands. And again, I reiterate, the VWAP bands are just for seeing the developing value in the ETH session and also in the RTH session, and they're for no other purpose. They're not really to take trades at 2 standard deviation or 1 standard deviation of value. You know, just because, for example, here it turned around at the top of developing value does not mean that that is the type of trade that we take. Okay, let's move on. Right. Okay, the idea for today. The idea, I thought, is something I would expand upon, and I try and always, when I expand upon, to be practical in my explanation, discussion of the topic. And when I say discussion, it is a discussion. So if you're on Discord, feel free to pop any questions or comments in the Moby ETH Futures channel inside the Bookmap Discord, or if you're on YouTube, just pop a question in. Somebody, Amir is there. Cool. Okay, good. I hope your trade works out for you. I will make sure that I've got the comments visible. All right. Okay. So the first or the only real educational topic I want to discuss today is this concept of casino thinking. You've heard me mention it in quite a few of these webinars. And by the way, what you see on the screen is just some random numbers. It's not a real part of my trading plan, or those numbers are not a real part of my trading plan. Yeah, I just want to talk about targets and how they relate directly to casino thinking. And when I say casino thinking, I'm talking about you operating your trading business as if you were the casino, and you were trying to get an edge over a sequence of trades that has statistical soundness, so in other words a large number of trades and not one trade. So we're not talking about home run trades, we're not talking about the type of trading where people take one or two trades per week. That is not something that I personally do. Um, it does not fit quite into my makeup, and I also think that statistically it is very hard to get the number of trades to show that you, or to demonstrate to yourself that you have an edge if you only take one or two trades a week. I think I'm just repeating myself, and I'm sure I've said that before. Okay, right, so I'm talking about over a sequence of trades, how operating as a casino can give you an edge. Right. Okay, and I'm now going to talk specifically about what you might have put into your trading plan, or what you might consider putting into your trading plan, both in terms of daily targets, weekly targets, monthly targets, financial year targets, whatever. So we're talking about the concept of tangible targets that you are trying to achieve, regardless of whether you do achieve them or not, that are in your trading plan. Okay, and how you can achieve them, and how, if you do not act as a casino, it may become very, very hard to achieve those with consistency and regularity. You may well have a great home run today, you may become boom and bust tomorrow, but that is not what we want to help you with, or it's not what this segment is all about. Okay, in terms of daily targets, I may end up doing a bit of typing here. People often talk about a daily target and a risk limit. So they'll talk about things like not losing X trades in a row, not having a drawdown of more than, say, $500 in a day. Excuse me. I'm typing those out because those are the common things that you hear about when people are talking about trading plans. In fact, if you go and do Google searches, YouTube searches, whatever, and you watch videos on trading plans, that's what they all talk about, right? Okay, well, that's one thing that they most often have in common. All right, what I'm talking about really for the purposes of this is something slightly longer term. So I'm talking about maybe it's your weekly target if you take lots of trades, maybe it's your monthly target if you take slightly less trades. By the way, I can see that the market is moving up, so I can occasionally flick backwards to the ES. So I'll just keep that there. I've got a shortcut, so I should be able to get backwards and forwards. Anyway, and I'm saying, yeah, those are a great idea, and it's definitely something worth considering having in your trading plan. In other words, I do have such a thing in my trading plan. So not exactly what I just said, but it's something specific to my trading statistics. But in addition to what you might be trying to achieve today, or today plus tomorrow, what you actually have to do, in my opinion, again, and all of this is my opinion, is you've got to have a look at a slightly longer term, because no business tends to operate on a day-by-day, fly-by-night kind of basis. So the target that I've got here, and I'll just highlight it in blue there, is just an imaginary target for, say, the rest of your quarter, the rest of the year, whatever it is that you think we are discussing here. So you could say to yourself, my financial target for the rest of this calendar year 2023 is 40R without the drawdown of my account exceeding a peak to trough drop of 20R. And I may have to draw what the last half of that sentence meant, so bear with me while I get the pen and make a mess on the screen. Okay, so say this is a graph of your equity. So as you win trades and your equity rises up, the idea of a peak to drop is that if this is the peak, because that is the top of your equity so far, that it will not drop from there down to 20R. And we'll talk about what R is again in a second. That is the basis of the second half of that discussion. If anybody's got any questions on that, or I'm not making that clear, I do have a question. Lashram Rakesh, since the long-term high liquidity is on the top, way beyond the developing value, is there a possibility that the current value will be expanded or shifted upwards? Lashram, we never predict the future. Anything is possible. Um, if you're talking about ES coming into a major economic release, definitely possible. And NQ, it's possible with or without such a release. So yes, I think you've got to keep an open mind when you look at any of that liquidity before a major release. And we've got 18 minutes. So I'll keep going with this for a little bit longer. Okay, so that is what a peak to trough drawdown is, right? What can you do to ensure that you don't have that, example 20R drawdown? Okay, I might just rub that last thing out there. Let me just rub that out. Okay, right. I might go back to the pen as well. Okay, right. If you have designed your trading business such that every single one of your losses is 1R, whoops, that is in control. It's quite easy to see and to forecast as you go through day by day by day when you will have that 20R drop, and your business will effectively be quite structured. If, on the other hand, you have not taken the time to structure your trades and your business so that on any single trade, you do not know that you're taking 1R as a loss, and you've got to assume that every single individual trade, sorry, it's my personal opinion, you have to assume from a personal opinion perspective that every single trade has a 50-50 chance of winning or losing. So in my mind, you have to work out whether what is the loss that you will be losing should you lose. If you have not set up your business so that it is 1R on every occasion, and by 1R I'm talking about the 1R dollar value. Okay, if you haven't structured it, and I can give you hints and tips on how to do it. I've spent a lot of time myself programming my own tools so that it's all structured around equal dollar value risk. But if you don't, and then you don't have to do that in an automated way that I've done it, but if you don't have the tools set up for yourself, whether they're manual or whatever approach you take, then what you could result in is have 1R for this trade here, 4R for this trade here, 2R for this trade here, etc., etc. So in other words, your loss becomes haphazard, and I'm talking about the losses here. I'm not talking about your wins. I know we spend an awful lot of time in all our webinars talking about triggers, setups, etc. But the real basis of this game, and I've said this and my colleague Thomas said this, it's about risk management, right? And so if you don't have a way in which you can monitor your risk management so that it is effectively or as close to as it can be to equal dollar value risk for each and every investment, bet, whatever you want to call it, every trade that you take in the market, then it is going to be very, very hard to have a financial target like the one up above that I'll highlight again. Because getting to that 20R is effectively going to become quite random. It's not going to be 20 individual trades. It could be 3 individual trades. So, say you actually met that and you had 3 trades that got you minus 19R, but you did actually get to your 40R for the financial year. You might think you've cracked it. But what you'll find is that is virtually unrepeatable. So what you're trying to do is to ensure that you have the same loss time and time and time again, so that you're giving yourself you're giving yourself a business that if you took to an accountant or a bank, they could vet and they could see that that it was structured as a business and not just a pure gamble. And you can also see that it then can relate directly to your trading statistics. For example, if you've got trading statistics on your win rate, on the likely R multiple of winners of particular setups, if you have those statistics would then likely become absolutely useless if you were losing random amounts on each and every loss that you made. Those statistics are a lot more useful, or just about the only times I would call them useful, is if you have um, clear parameters for an equal dollar value loss. Anyway, I just wanted to quickly explain what I meant, because I've been talking about this casino edge for a long time, and the casino really is all about this line here. It's the losses. It's not about your winners, right? We can get into scaling out, letting winners run on certain trades. As we can get into that many times over in future webinars. But that is to a large extent irrelevant if your losses are random. And I just wanted to stress that again. And I thought maybe, this kind of statement here, it hits a bell, it rings a bell in my head, because it makes me look forward to operating this trading game as a business rather than as what is going to happen today. Today can be very short-sighted, and you can just be totally and utterly focused on having a winning day rather than be focused on the risk management. If you make your targets available to you that cover periods longer than today, that gets your head into a different kind of headspace, and that brings the whole concept of risk management to the forefront. So, one of the things it hammers home, or it may hammer home to you, is that you do not want to damage your business in such a way today because of sloppy management of risk that would mean that you cannot meet that future financial target, whether it is the quarter, the month, the year, whatever. Anyway, it was just a thought, so let us get rid of that. Let us go back to ES. We're going to try and do some context prep very quickly for the next 10 minutes. We've got about 10-11 minutes before the release. And I will just ask, I'll just have a quick look, see if there's any more questions. I know I've been speaking quite quickly during that little educational bit there, but literally we do not have a lot of time before that economic release. It comes out in 10 minutes. Anyway, we will jump to some slides to give us some context of what is happening. Okay, let us go back. Okay, let's just look at the daily. So despite the down day yesterday and the run down from this little swing high at last month's close, effectively, that's what LMC stands for, we are still in this multi-month uptrend. So that's something that is worth noting, and that applies equally to ES. And if we move forward to NQ, so NQ is stronger. It's well above that that multi-month up trend line, so we're still in that longer term uptrend line. Okay, look. All right, I wanted to pull up this. This is something I mentioned in Friday's webinar about using the free TradingView heat map just to get an idea of what happened and what may be in play by way of the key tech stocks. And here we've got a few of the key tech stocks in big red numbers. We've got Amazon, Microsoft, Google, and Apple. And importantly, Apple had its iPhone press release overnight, and yet it went down. So it's just interesting for the market going into a big economic release. Does this portend that we could have a downtrend day? I don't know. But one thing that I do know from statistics that I have kept is that there is a probability that if we do get a trend day, it is more likely to occur when you have a major economic release before the market opens. Here we've got the 8:30 CPI, 8:30 Eastern time, so we've got that factor in there. And if that does take place, i.e. we do get into a trend day, it is likely that the high or low of the remainder of the session, that includes the RTH, is made within 15 minutes of the release being made. So if the release is at 8:30, all we're saying is that there is a probability that, say we have a downtrend day, that the high for the next 8 or 9 hours is made within the period 8:30 to 8:45 a.m. Eastern. So that's just that. Okay, let us go back and have a look at context in the terms of the profiles. And I'm just going to show you where we are. So we've got a large value area. Time to draw again, I think. So I'm not going to merge all the profiles for this purpose, but I'm just saying that one thing you've got over these last few profiles is a large value area there, right? Does that mean we're setting up for a big down move, taking out potentially a little poor low there? It's not easy to see. It's just a technical thing in this particular Sierra TPO, but I won't go into that. Does that mean we're potentially going down? Yes, it's a potential. But they do love to squeeze people. So if it becomes too obvious that they want to go down, they will squeeze all those late shorts and take them as high as possible before they ever do go down. That's just one of the games that they love to play. So if we look at that profile there as well, I mean, there is some a tapering off of value there at 4516. So it'll be interesting to see whether we get much above that if there is a little move upwards from the economic release in 7 minutes, or whether we go straight down and start moving into the value below. And if we zoom right out and look, there's another big value zone there. If you really want to know about longer term composites, go and
NQ sell 30 stop.
Go and look in Tom's channel in the Bookmap Discord, where he covers it in a lot more detail than I ever will. Okay, and I'm just going to move that one out because I want to have that visible to me so I can help provide some commentary during the release. And we have a look at the NQ one. So let's just zoom in. Again, it'll be interesting to see if we can get below this little tapering of value here, which is around about the 20 daily moving average, and that's at 15,400. So can we break under 15,400? That may be 100 points lower than we are now, but anything is possible with these large economic releases. So that's just the context. We're in an uptrend, but yeah, there's potential to move down, and on NQ as well. It's relatively clear that the upper boundary of this value over the last few days is around the 15,600 mark, 15,610, and there's some liquidity up there as well. So, you know, they usually play that game where you can see some liquidity in NQ both before, above and below before a major release. Let me just get rid of that as well so that I can have it on my screen. Right. Okay, we have 5 minutes to go. Just having a quick look again at the 3-minute charts. So in this context, we've got the pink line there, which is settlement both for ES and NQ. So we're relatively unchanged for NQ, and we're a little bit off, just a little bit below settlement for ES. We're going to stay with the Bookmap chart right through to the release. I'm going to turn on my financial juice feed. I don't think it comes through my microphone.
Adjusted year-over-year increase in headline CPI to 3.6% in line with median estimates from a low of 3.1%.
I might just mute it. I'm just a little concerned it will come through and it will distract people. So if we zoom back out and look where this liquidity came in, so they added 50 around about this time here, which is not too long ago, 10 to 8. And you've got this little iceberg, a buy iceberg of 136, and they've kept it there, signaling that they will transact again, or signaling they may transact again should we get back down there. And more interestingly, coming into this news release, they've removed the liquidity up at 4525 that I pointed out at the beginning of the webinar. So that big resting liquidity that was there, they've taken it all off, or they've taken off 350 of it, so they've taken off as good as all of it. There is this resting liquidity up at 4545, and again I'm speaking in December futures values, not September. We have rolled. The volume shifted on Monday. I rolled on the Monday. It's interesting that that level there, 4545, that liquidity has basically stayed constant throughout the Asian and European session. So that is interesting that they have not taken that one off. Again, that's 33 points above us, so it's hard to imagine that you get straight there at 8:30, but it doesn't mean it won't get tagged later on during the rest of the day. So just looking at what's happened here, I was looking at ES and NQ. They both basically had a rejection of a level at 4515. So this level up here, I was just looking at a much shorter time frame chart and what is on it.
NQ by 26 iceberg 15,491.75.
There's just an iceberg alert I got there from NQ. I'll just have a very, very quick look at it to see if there's anything in NQ that we can see. I found since we rolled in December to the December contract, we've just got these two algo liquidity bands that are bounding each side of the market, and there's not been a lot of great resting liquidity that we can use as magnets or targets. Maybe that will change after this release, who knows. There have been some good resting levels, but not as many as usual. So I'm just having a quick look. So we had a little stop and iceberg just there, and the 53 iceberg buy iceberg in NQ is a significant number, so it's interesting that they are trying to support this level. So what should you do coming into an economic release, unless you've got some very, very good justification because you've done some analysis or you know something in particular? Please keep an open mind. Anything can happen. We tend to lose the most money when we get a fixed mindset, i.e. we are convinced that it will go in this direction now or relatively now. That's when we lose the most money. And we tend to make the most money when we are open in our thoughts and are willing to take...
NQ sell 31 stop.
Okay, we have had a little up and then straight down. So the release has happened.
NQ sell 20 iceberg 15,436.5.
So the CPI was 3.7% against a forecast of 3.6%, so slightly above the level, so inflation is higher than anticipated.
NQ sell 46 stop.
So we've got this level here at 4481, which is probably looking quite appealing now. We've had a big breakdown. See what kind of retracement we get. We've got some trap sellers there potentially, if we can just get above them. I'm just looking to see, we've got a contract, we've got a, see whether we can hold this 01 level where they've got a buyer of about 200 at the 01 level. But we're below them already, so I'm just thinking there may be some resistance now at around 01, and can they hold that? So I'm just holding my cursor roughly where the resistance is.
NQ by 20 for iceberg 15,415.5.
I would have been looking for a short just above that level there in towards the 01. Just a little squeeze would have been nice to get short. But I'm not trading. I just like to point out I'm not trading. Here we go, nice little squeeze coming up. See how they take it. See if they will get past this 01 level that I just pointed out. Maybe they will. Got some liquidity up at the 05. So we're into where that buyer bought at 200 previously, around about there. We've got this liquidity up at 05. I haven't got any retracement tool, so I can't tell you what a 50% retracement of this move is, but I can tell you that there's a little HVN up at 0625, which is about there, just on top of that liquidity there. So far it was quite a clean move, clean retracement back straight to this band of liquidity, and we've moved straight back down again. And the target would be that 4495, which has stayed very steady. So the liquidity was more useful than the large volume trader, and then again 200 is not a huge amount for ES. So I'm just saying that there is a little HVN up at 0625, and one trade setup that we do like looking at here is the category C, or the up thrust, where it just takes out this little high, hits liquidity, goes as high as it can, and then falls. And I've also got to bear in mind that I said keep an open mind. So it is also possible that the low for the remainder of this session and the RTH session has been formed at
NQ by 180 to stop.
So this has been quite a good squeeze. So if we zoom back in and we look at how much of this delta is red at the bottom of this, that's why I use this to see, have we got, you know, potentially quite a few late sellers. Is there a tapering of the volume profile? What is it likely to get back up to? So the first thing we got back up to was the little HVN at 0625, and then we've got back to the main HVN or VPOC and VWAP up at 0925. So we've managed to get back there. Seeing if we're now going to get a reaction. Let's have a look what's above now. We've still got liquidity up there. So it seemed to be that we were getting a retrace towards the scene of the crime. And the breakdown from the release, or the release really occurring, was up at the 1175.12 mark. So maybe we're going to get a retrace right back to the crime. And the scene of the crime is a euphemism, or another way of saying the major economic release. So the price was effectively around about 1175.12, 4512 at the time the price was released, but so far we're just going right back up to it. I'm watching to see whether we can zoom in on this one, whether we have just rejected VWAP and we're back under yesterday's low. So far, you know, if you manage to get an upthrust trade around about the 0970 at VWAP, you would have done very, very well. So there's been a nice rejection of VWAP straight down to the liquidity that they put in place at 0350, and now they've removed that. So the next question becomes, are we going to get above the scene of the crime? So I say it was 1175, 1175.12, 45, 1175. So far we're right back to it. So it's decision point here. This is like the continuation of the auction after the initial crazy reaction and just
NQ sell 21 iceberg 15,482.
So we're forming some value here. If we go into the microstructure and zoom the axis out, up a bit, form some microstructure there. We're back into this
NQ sell 20 iceberg 15,479.5.
We've been both sides of that structure, and now we're exploring higher. So we're now higher than the price release of the market. I'm just having a quick look at questions or comments in the chat. There is nothing there. There's some nice liquidity levels above, but we've got to look at the microstructure to see, are we forming a slightly wider range of value around about here. I can draw it, but essentially I'm talking about 45150 down to about 4,509.75. It's a new little value area there. You can see it over here. So if I zoomed out, you can see this nice balance of the profile there.
NQ Cell 20 Iceberg 15,479.5.
I don't know if you can hear those iceberg alerts every time I get them or not. I don't think that goes to Discord or to YouTube. I think it's just my microphone. So we're at the top side of this little congestion area now. Do we have the urge to explore or auction higher? So far not. But the fact that we've now had how many little tags? 1, 2, 3. Yep, they're breaking higher now on the third. In fact, you could say it's like the fourth tag they're breaking up higher. And they're providing some liquidity up above there. So we're auctioning towards that liquidity up at 19 now. And why did I get my profiles up? So I put them back on my main screen so I can see where we are in relation to the value that was formed yesterday. We're close to settlement now. We've taken out settlement. And ES has just failed just shy of the ONH, the overnight high. And you could also say that it has failed into this liquidity band here. So I've got it today. I've got it. I'm showing the liquidity a little bit more brightly than I normally do. So I'll just zoom out again. But you can see it there. If I make it a bit dimmer, and we zoom out, you can see that liquidity band that's forming the initial resistance is a little bit easier to see than how I had it before when I had it on very bright. So we've got some liquidity here. Can we munch through it, or will this be a good barrier rejection wall to take us back down? So we're right back to the scene of the crime again, 1175. And this little value here, let's just zoom in again. Yeah, this area here marks the bottom of this current value congestion zone, trading range, whatever you want to call it. I'm just looking to see where most of the trades took place. From what I can see, there are a lot of trades in the last swing up in the 13 to 14 zone. So really that little zone there. So that for me is the little line in the sand at the moment. Yeah, I thought it would be tempting for them to come up and tag it, but the first thing they're doing is tagging this little buy ice and seeing how many orders it wants to transact. So far it's 24, only 25, so not huge. No, they've added another one. So you can see that they've taken two buy icebergs of 56 and 25. Is that enough to give them enough fuel to get back up to the 4514 or not? It's really just basically a lot of chop on this release. Coming back down to a key level being the boundary of yesterday's range, yesterday's low, which is right at 0750. So are we going to stay in range, or are we going to go back to exploring below yesterday's range? In other words, was this just a big squeeze up to get the fuel to go back down to target that 4495 and the 4490? That is the question. One thing I do like to have, as you know from previous webinars, using these
NQ by 20 iceberg 15,471.
Just had another iceberg alert, so I apologize if that came through. Yeah, I like using some of these resting sell icebergs as targets when I find a long position to get into. Again, nothing works every time. And here my wider approach would be to eventually get down to the 95 and the 90. So the fact that they have this as a potential target, you know, a lot of me would like it to get back up there so I could short back down towards there. So I would be hoping that these sellers will get some more business up there, but so far we are forming quite a decent number of sellers here. So we're going to trap these people and then squeeze them up, or we're just going to form a new line in the sand here. We're back under the scene of the crime again. The scene of the crime was about 1175.12. And we got down previously almost to that 4495. Thank you. Yeah, I'm glad the alerts don't come through. What I will actually do the next time I do a webinar during a very volatile period where I'm going to get lots of alerts, so I'll switch them off for myself. So I mean, it's relatively easy to do. So if I go into N and Q, and then I go in there and I go back to the stops and icebergs on chart, and I turn off these alerts so that I don't get too many of them. But whilst we're here, we can have a quick look at NQ. You can see that algo bands bordering the market. You can also see a tiny sell iceberg involved in pushing it down. I'm not seeing a big red tail in delta there to give us some fuel to have a nice little retracement. So in other words, there's nothing there yet that would necessarily want me to go long. And again, I'll be looking at shorts in the slightly higher time frame perspective. Whilst we're looking at this, I can explain a little bit about how I use multiple time frames. Okay, and they don't always stay the same. So I look at lots and lots of different time frames. I look at lots of correlations. You know, I'll look at the daily, the weekly, the monthly, etc. But from a trading perspective, we are now finally getting that retracement. You know, with this 105, 200 buy iceberg, giving them enough fuel to push it back up a little bit. But I don't know if we're going to have another retag of that 1650. Maybe we will on the RTH Open. But yeah. But what I tend to do in terms of how I use multiple timeframes for trade execution, that's in execution of setups that are in my trading plan, is that I'll have a slightly higher time frame and a very short time frame. So, you know, in ETH Asia, I'll have a 3-minute chart like this ES and NQ chart, whether it's in TradingView or Sierra, as my basically my bias, my overview of where we're trading to and from, and then I will be using a shorter time frame. You know, if it's slow, it might be the 20-30 seconds. If it's fast or if it's crazy like NQ, it might be the 10 seconds, 15 seconds, but something shorter. And in RTH, because a 3-minute chart, I don't find that helpful because it moves so much. I'll tend to use more of a 1 minute as my higher time frame execution chart, and again be looking at the 10-second type time frames on the ES in RTH on that basis. So the 10-second is more just to be able to execute, and the setups are really being derived off a slightly longer time frame chart. So here, I mean, because it's been so crazily volatile since that news, we would probably have gone, great. Not sure why it did that. Oh, it doesn't matter. I've lost the TradingView charts. I will explain why I've lost them. It's a little bit of a pain, and it's a process that I must do every week, which I have not done this week. If you're a TradingView customer and an Interactive Brokers customer, you get interactive brokers future symbols data free inside TradingView as long as you connect your interactive brokers account every 7 days or more frequently inside TradingView. I obviously have not done that, so I've temporarily, until after this webinar, lost my ability to see the 3-minute, or what I was trying to do, the 1-minute charts on ES and NQ. Doesn't matter, we'll just blow this one up and I'll move this out of the way. So we'll just focus on Bookmap and Bookmap alone for the rest of this webinar. So if I was looking for something crazy and technical, I'd be looking for some kind of long setup with a trail or an ultimate target up there, right? Because they made it fairly obvious so far that they want to go down. But I just have a habit of just watching them go for these squeezes first before the nice big moves down. So it just would not surprise me if they didn't just squeeze a little bit. We also saw the buy icebergs here, and since then, since we formed the low into those buy icebergs, they have not been able to retag it or go any lower, i.e. the exploration or the auction exploration has not got lower on this little bit below 4503.50. And when you do see those icebergs, it may be signaling to you that they got in to drive it somewhere. So they got in about 300 buy icebergs here, and we know that they had 164 here. So it may well be the same person. We don't know. We never know. But we do know that they are advertising a sell up at 56.75. And that some of those people have averaged in their price around about the 0450. So even if they exited now and then they pushed it straight back down, those people have made quite a lot of money. You've got to be aware that there are a lot of people operating on a lot of different time frames with vast variations in the depth of their pockets. In other words, some of the people here may have had hundreds of thousands or millions of dollars in the market for this push up towards this 0675, and other people have got $100 or $200 at risk. So it's just interesting to see. And just because they flagged this sell iceberg here doesn't mean that they'll necessarily fill it. What's also interesting is watching when or if we do get up there, watching the buyers, the sellers, and the delta as we approach that 0675, because they may get their fill without ever tagging it and then go straight back down. Okay, I'm just checking to see how we're going. Not got a huge audience today, but that's no problems. I still hope we provide a bit of value. Yeah, so yeah, if we'd got along here and okay, if you were going to trade supply and demand, let's dissect this. Okay, you saw the buy icebergs, you saw them take 300 here. You've got this target up there. This is not a trigger per se. It might be a trigger for you, but it wasn't a trigger for me. It's when we come back down and we retest this zone here. That's the category A supply and demand or demand zone test that I'm looking for a long here. I know you've got this liquidity target there, but price does not move in a straight line, and they often go in the other direction first to fuel a direction. They go up to fuel a move down. So that was the logic behind me looking for a long to get up towards this 1675. And this was an entry, or these two little things. The fact that we auctioned back down to here, which is where they basically bought in, and we could not break this, was a signal. So you could have taken it here, you could have taken it here. It's really the location of that test of the demand zone, and the fact that you've got quite a big target. So if you'd got in here, which is about the 05.25, and you got a 10-point target, a 10-point plus target, so where would you have put your stop? The tightest possible stop would have been around about here, so about 2.5 points. You could put it in, maybe you'd put it in a stop down there, but I wouldn't have there. I'd have had a tighter stop. Now, I should explain as well that in some of the tools that I have for Sierra, the way I have done it so that I meet the R discussion that I was talking about in our education session. I have to have drawn my stop, which is a horizontal line, before I get into the market, or I don't get the requisite contracts that I want to take. In other words, punishment for myself. That if I haven't clearly articulated the stop so that my system can then calculate the R dollar value risk, I won't get the requisite number of contracts. I only get one contract, so it's just a pure little one specky. But that's the way I work it in my system so that I have equal dollar value R risk. And here we are. I mean, if you had got in here, I would have been scaling out completely or nearly all but one contract by there. So within, up to about 1650, and I'd be very, very happy with that. That would be a 10-point gain. That's huge. That's a pure supply and demand trade. It's a little bit technical because I still think, and what I think is completely irrelevant, but what I thought was that we might go a little bit lower down, certainly in RTH. But again, you must take an open mind approach whenever you take these trades. So regardless of the fact that I thought the longer term directional bias was down, and I had various reasons for it, such as the big techs looking quite weak, and maybe a retag of those multi-month daily uptrend lines. It's irrelevant to the trade here. This is a perfectly valid supply demand setup with a great risk to reward profile. So yes, you do take it. It does not matter that they're going down, that they may go down. What matters is that you are protected and that you're not taking more than 1 hour's risk on that trade, and that it has a potential for a multiple R. Sometimes you may take a trade with, which has a very high probability that will only just get you 1 R or just above 1 R. But this was actually an exceptional opportunity for us. But the other thing it had going was that we'd had 14 minutes or 15 minutes by the time that the actual setup occurred since the economic release. So some of that crazy level of volatility had calmed down, and the price movement was a little bit more even, orderly, structured, whatever kind of word you want to use. And if we zoom out here, and say you are biased towards the short side, when it comes back here and it tags that resting iceberg, you could say that is a supply zone type A or type B test setup for you. And you could have a very, very tight stop saying that, if this is clearly what I'm doing, I want my stop very, very tight within a point. But at the moment, they've got a good squeeze of all these players down there, and they're going to drive it, or they're likely to drive it as high as they possibly can before they take their next move. So at the moment, we are clearly exploring higher. So if you look, we made the low there, we couldn't re-tag it. Then we've been exploring higher and higher and higher. So if you zoom in to the microstructure and look at each of these swing points, you'll notice that we are auctioning. Now we are into more of a balanced congestion zone, being bordered by this sell iceberg, and they are gathering. They've got 93 at the moment, so it'll be interesting to see. And you've also got the liquidity zone up above. If I zoom out, you can see it a bit better. So it's really in the 20.5 to 17.5, a 3-point liquidity wall, effectively. So, I don't necessarily look for longer swing trades. I look for shorter trades. But you might have been looking at that wall of liquidity, saying that's a good point to get in to go back down to there. Yeah, that might be one of the things you're doing. What I'm doing right now is looking at seeing whether, now that we've done this this tag of this previous supply zone, whether we're going to have a breakout failure and upthrust, i.e. are we going to reject this, or are we going to continue to explore up? At the moment, we have not had a rejection. We have continued to explore up, so we're going into that resistance liquidity band, or rather it's not a resistance liquidity band, it's a liquidity band. Let's be objective about any discussion, commentary, analysis we have on this. This is just a liquidity band. and the largest level is at 4520, which is at 207. As I said, I like volume dots, so I can see I can look for large trades because they can often be turning points. So I'm looking to see what was this size here. So it's nearly 600. And then I'm seeing, because we often get this 1-2 punch at the end where we have a move up and then we just have one last drive up. I'm seeing if we can get a rejection, if we can go above it and then reject back below this big trade, which was at 4518 and a quarter or a half. We're basically in between. Are we going to reject that, or are we going to continue to get deep into this liquidity band? And whenever we get a chance, an opportunity, we're going to have a look at the resting liquidity and see whether it's still there or whether it's now been removed and become irrelevant. Remember this 4545 that we said had been there for the entire Asian and European session? That's still there. So even though it was not something that was likely to be tagged straight away, it remains on our horizon as something that we know is there, and that should we have an uptrending mini session, sub session, whole session, whatever turns out, that we're aware of it. It doesn't have to form part of our setups. It's just part of our overall objective analysis of using market generated information in looking at the market. So we've gone up into this liquidity band, and so far we have now rejected it. So we've got some trades there. So if we zoom out here and we just look up again, this is what we want to see in the delta column. Why do we have this column here? It's to see any trapped late players. On an upswing, it's trapped late buyers. On a downswing, it's trapped late sellers. And you've got some there, and we've rejected a little bit. So as I said, one of the things you'd be looking at on this 1-2 up move is you'd be looking for a break up and then failure and back down again. So you might have taken a trade short just around about there. If you had taken a short at 4518.15, you'd really want to take your stop probably about 4 points away, just the other side of all this liquidity, because it's very attractive for them. But what would you have got? 4518.50, you would have already got 1R. So whenever you get 1R, you've got to be happy. You've always got to approach this with a very positive, happy, open mindset. 1R, great, the market gave me that. This is the hardest way to earn easy money. It's probably a good description of it. So whenever you get that easy money and you work bloody hard to put yourself in a position to get it, then just be happy. So I'm just having a look as well on this one. Probably the first time I'm looking at the unfinished auction scenario. Not quite there. Just wondering if we had a big fat unfinished auction, but no. But it does look like it wants to continue the exploration down. Anyway, at this point we have reached the 1 hour. Who knows what will happen next? I hope it was of